In this video, we're going to talk about Palantir, trading under the ticker symbol PLTR. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. Those are prepared, recorded on the day before, and scheduled for the next day. If there are significant and volatile movements during the trading day, they will not be reflected in the video itself. With that being said, to the extent possible, my analysis will be based on the medium term, or even the long term, and not necessarily on the intraday movements. The main reason why it shouldn't matter that much is because most people investing in stocks, or even just trading in and out of their positions, usually keep their positions open for at least a few weeks. With that being said, if there are significant movements in the stock price that happens afterwards, either they will not affect the overall picture, so in that case we will cover them the next time we're supposed to cover them, or if they are significant enough that they change the outlooks, then yes, I will do a follow-up video in the shortest delay possible with a reevaluation of what I think should happen next. Palantir is a data analytics company founded in 2003. It is headquartered in Denver, Colorado, and develops software platforms and applications to better connect the data flow with operations. Palantir has an appeal for the market because it does have a solid reputation built in a relatively long time and has a lot of established relationships with major federal agencies, which can help the company to get many long-term contracts as a result. It operates in many sectors including automotive, legal, natural resources, and finance. The platform it develops are Palantir Gotham and Palantir Foundry. The market cap of Palantir is currently at $47.7 billion, and the enterprise value is at $47.8 billion. So in other words, there's even a slight discount compared to where the EV is. The market cap is the price tag that the financial market is willing to pay to get a piece of Palantir right now, considering its future potentials. The enterprise value, on the other hand, is the accounting result, or the sum, of the company's asset values once all the debts are paid off. Usually the market cap is higher than the enterprise value, but sometimes there may be exceptions, because the company may be highly leveraged or under a lot of pressures from special operations like shorts. Or in the case of Palantir, I think it's more just because the company is highly valued based off the current revenue levels. The quick ratio of Palantir is 3.9, and the current ratio is 3.9 as well, with a debt over equity of 0.12. Another way to put this is that Palantir is very liquid, has little debt, and doesn't have any sort of solvency issues. And also, it doesn't have any urgency to dilute the shareholders. The average trading volume of Palantir has been 36 million shares, and the daily volumes have been around 117 million shares, 41 million shares, and 26 million shares. So it's very, very traded in the stock market, and I don't think that this tendency will go down anytime soon, especially now that the price suddenly dipped in the recent days. The 1-year beta of Palantir is 2.5. Its 52-week high is $45, and the 52-week low is $14.40. That means that Palantir is more volatile than the rest of the market, and generally speaking, that is a good thing, given that volatility provides profitability. Now, let's also talk about the options market for Palantir. In terms of volume and open interest, the options market seems to favor the calls options, but with significant put interest as well. Generally speaking, the put options means that the market expects a pullback, and the calls options mean that the market expects the prices to move up. The key strike prices where there seems to be the most interest are $25, $28.50, and $30. Now, regarding Palantir, my personal recommendation is to maintain an overall optimistic outlook on the company, but also keeping in mind that the company is very highly valued based on the revenue levels, not based on the assets, the revenue. Because the expectation is that Palantir will keep getting a massive amount of contracts going forward, mostly from public sector. Recently, the stock price took a nosedive because the company reported quarterly results below the expectations. These, however, don't really change the fundamental nature of the company's outlook, and I would argue that now is actually a decent timing to buy more Palantir shares. Nevertheless, it would be recommended to not trade the news because the volatility may be very significant and not favoring the shareholders in the short run. I would recommend to keep your Palantir position around 5 to maybe 8% of your portfolio. Your investment should also take into consideration the market conditions at the time and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long, and when you should be selling it. First of all, the financial market doesn't reflect the real economy. That much is a fact. If the stock market is doing great, it doesn't mean that the underlying company is necessarily hiring more people, increasing the wages, and rising the living standards of its employees. Sometimes it's even the exact opposite, because the stock market is a big pool where money comes in and out, goes to different places in order to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is been used for non-productive purposes like mergers and acquisitions, paying dividends to shareholders, buying back equity, and so on, the less there is for the productive parts. Another way to put it is that ever since 2008, the Dow Jones Index has increased its value significantly. But people don't necessarily see this growth in the main streets. This is why we should be careful with the assumptions of what rising prices mean for a company. Sometimes it doesn't mean anything, other than the fact that the asset is getting more expensive and that their yields is going down. Additionally, some new phenomena are now palpable, and they are the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullbacks. Bubbles have always been created over and over during the past few centuries, ever since there are financial markets. But nowadays, it's quite interesting to see that the speed at which they are created, attract people or capital, and then go bust is getting faster and faster. So almost immediately after the major collapse of the market prices back in early 2020, the same market decided to create a massive bubble of the electric vehicle sector or anything that is related to it. So almost immediately after the major collapse of the financial market back in 2020, the market then decided to, one, recover any sort of price that fell during the first 3 months of the year, and then attract a massive amount of capital into the EV sector or anything that's related to it. Stock prices across the board, but in the growth stocks in particular, went up to the sky for a moment. And even if it didn't last long, this episode definitely allowed market participants, or many of them, to park in their money in a sector and left with either a lot of profits or at least avoiding incurring large losses because they left their money in blue chips or the sectors that are heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, because in the scenarios of a short squeeze, companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then trigger even bigger increase in stock price. But I'm not saying that this is always rational. And I'm not even saying that companies will always have a very convincing narrative or good fundamentals. Sometimes there's none of that. A good example is with GameStop. If you play video games, ask yourself if you would really always buy your games at GameStop, knowing that you would be buying those games online as well, or knowing that at least you have the capacity, the right to buy those games online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price, for the better or worse. Personally, I think that as long as the volatility is high, it'll create opportunities. The final phenomenon is the anticipation of a recession. Many people are expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because of the debt structure no longer sustainable, or that their business model is just bad. But somehow that system was able to hold its ground, especially in the North American market. This is partially because the capital around the world chooses to come to American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that the capital can provide steady returns without being affected too much by central bank policies and inflations, this phenomenon will intensify over time. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain low because the real economy cannot just improve because the asset prices go up. As far as we're concerned, that means that the patience of market participants over the next couple of years will be a great virtue, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and your risk level under check. Your speculative positions should play a relatively modest part of your overall portfolio, so thanks for watching. If you like my content, please like, comment, and subscribe to my channel.